Good evening, ladies and gentlemen. Michael Silva here. You're watching the Stock Market Brief Show. The bounce, the rebound that everyone wants and needs is what we're going to be talking about on today's Stock Market Brief Show, where we navigate the financial markets through the lens of technical and intermarket analysis. We're going to be getting right into it today. The 11 sectors that make up the S&P 500 were basically up on the day, minus that of energy. The VIX, the volatility index, did get crushed on the trading session, but it's important to look at the larger picture of what's been going on. We just came off of a week with a lot of sell-side activity. So the question here is, are we just seeing a little bit of a bounce, a little bit of reprieve from that? Well, coming on deck this week, we do have some monster earnings, of which is Tesla and Google. They're going to be reporting tomorrow after the bell. So that's going to be on deck. We also have some big macro data this week. Thursday, we got durable goods and GDP growth rate. And then Friday, we get some PCE and personal income, personal spending numbers there too as well, which is creating some large expected moves in this marketplace. I'll pull up the SPX. The S&P 500 expected move for the week is 5589. I'm going to round right there, okay? So it's actually technically 55.89 and 58 cents. I'm just going to say 55.90. And you can see we made a nice move to and around that level already to start this week. The lower level here is 54.20, and you can see that we've already came into the monthly expected move at 56.24, and when we're above there, we came back in. So, right, it's July 22nd. This was the monthly expected move. We've already tagged it, and we're right at around that weekly there level as well. For the daily expected move going into tomorrow, we'll talk about these SPY. We have 558 to the upside and 551 to the downside. I'll talk about this chart here momentarily. I want to get into the weekly charts because we didn't do a weekly recap to really give an idea of like, okay, what's going on? Should I believe this bounce? Should I not? First and foremost, we are in a period of seasonal weakness, right? The summer doldrums, things tend to go sideways, chop around before it finds its directional bias. And if we go into the S&P 500, last week we did have a outside trading week, and this was pretty bearish. We closed near the lows of the week, right down to that weekly 5 EMA that has been inclining. And typically this two-bar reversal pattern can mark a potential short-term top or long-term top in the market. The only way this negates itself is if we cross above the high of this last prior week. And you can see as it stands right now, this is only day one of the trading week, we're currently inside of this week. So it depends on where we go. Even if we go up to 56.25 and everything's all fine and dandy, that would just be an inside trading week, and it would not negate the fact that this could still be a potential turning point in the S&P 500. So the high of the prior week is the one to watch. The NASDAQ 100 has a three-bar reversal pattern known as the evening star. Now you can see this was a monster bearish week. So to see some reprieve and see a little bit of a bounce makes sense. To where? Maybe perhaps 20,200, which is roughly right around this week's low point. So if you get a bounce all the way up into this area, it's going to bring in a lot of excitement into the markets, even if it goes up higher. But the only way that this is going to negate itself is if we take out 20,700, which may be in our cards given the fact that we are coming into some tech earnings, or it could just be the start of potentially more sell side. As it stands right now, we're trading inside of this current week. If you take a look at the Dow Jones Industrial Average, this is a monster shooting star candle, right? We've seen a move up and we saw a massive reversal. So if we start closing below the low, we may get some more continued sell side. But right now, with that large of a range, it's very common to see an inside trading week. We'll see where the week closes, because this last week, albeit it's a bearish looking candle, we did close higher on the week. And currently, if we close above, 40,300, it would be another weekly close that's high on the Dow Jones Industrial Average. IWM printed a very similar type print, but remember that closed higher on the week. It just dealt with some volatility throughout the week, and you can see we're getting some continued move to the upside on IWM. We can pull up the daily chart a little bit later. The current market conditions are important to note, right? We've been talking about the gamma flip line and we were below it. So this is a time where dealers sell into selling, they buy into buying. As it stands right now, 55.65 is the gamma flip line. I'll be updating that in the morning in the Discord, and I'll probably update again in tomorrow's video. But we are currently at that gamma flip line. So we're slightly above it on this specific chart. But if you look at the SPX by CBOE, we're basically on it. We closed on it today. So right now we're kind of gamma neutral. Like I would say this is more of the neutral zone. When we start breaking up from it, I would say that would be back to positive gamma territory. If we start breaking back below it, back to negative gamma territory, we're selling but get selling, buying but gets buying. And you got a lot more volatility in the overall market. If we go to the 5-day moving average on the SPY, notice how we had this bounce back, okay, but we still haven't actually reclaimed the anchored volume weighted average price or the declining 5-day moving average on the S&P 500. This anchored volume weighted average price is from the July low, which is basically in line with the start of the month too, so the month to day anchored volume weighted average price. So the average buyer in this month, based off of that time and volume, is still actually underwater. We cracked through it, and now we're seeing a little bit of a bounce back, as to be expected. So if we continue to move up to the upside, just keep an eye on the upper daily expected move and the weekly expected move, which is roughly at about, we're going to cut it in between 558. Okay, and that would bring us back above the 5-day moving average, back above the month to date. But remember, price action, it kind of went far and fast. So where would a stop be? Well, a stop could be here, or today's swing low could be an ideal stop as well if you are long. And you can look at that daily expected move right at around 551 and 22 cents. Okay, another way that you can potentially look at this is look and follow the week to day anchored volume weighted average price. If we can remain above that, that can be a bullish sign. But this warrants caution until we can start to flatten this out and turn back up. So right now, the conditions of the market are altering, they are changing until we have more data come in. Let's take a quick look at crypto and the cellular to shift tool. The cellular to shift tool I wanted to bring up because we did cross over that buy signal. We ended up closing above there on the week. So that gave us the signal, and today's price action got above the prior week high, which activates the buy trigger. Now, the price action went from a pretty significant low, shot up pretty hard, far and fast. So we are in the buy signal, buy trigger, but I wouldn't be surprised to see this try to consolidate a little bit here. The last time we had a sell signal was right here. We saw a quick flush, but since that time, the price has recovered. So we've been seeing quite a bit of whipsaws in here as price action's going sideways. If you watched the last video where I talked about this, we went into some crypto equities, and those things looked pretty primed to make a move because of how contracted volatility was, and we saw that recently. If you look at the chart of Bitcoin, you can see what I mean by it. It went up pretty far and fast. So to see this consolidate up and around this area, maybe flag out, could be a better opportunity to get long various crypto stocks or Bitcoin, Ethereum, so forth. I did hear recently that Ethereum, I believe, is going to start trading the spot ETF tomorrow, I believe. I'd have to double check, but or this week. So I'd have to check in on that, but that is what I heard. Let's go ahead and hop into Thinkorswim now. I want to go over some various stocks. Now that we are understanding that the market conditions are subtly changing, I think it's still important that if we do get these bounces back and they are going to hold, we can look at some various names to play into that if the market recovers. We'll start off by looking at IWM. Now, IWM is obviously the Russell 2000, the ETF, and we talked about this on the live stream. If you didn't catch it, it's okay. But we talked about while the candle was the inside trading candle, we said if it broke above the high, that warrants putting a stop here, entering here, and seeing if we can play it to the upside. So if you manage to catch that, I still think that this looks pretty good for the most part. We had a nice move up. We pulled back. We'll see if we can get some follow through, but manage the stop if that actually wants to come down and break down. If you look at XBI, very similar type of situation where we saw this nice breakout. We're pulling back here. Maybe we consolidate a little bit longer, sets up for another potential continuation rally. XLY is also pulling down, kind of wedging here after a nice strong move. These are just the 11 sectors that make up the S&P 500. Interestingly enough, if you look at a lot of them have broken down from like their 5-day moving averages. So for example, XLY, it's coming into what? A declining 5-day moving average. XBI coming into a flattening to declining 5-day moving average. Semiconductors, very strong move to what? A declining 5-day moving average. Financials, right? We're below the 5-day moving average. It's starting to flatten out here. Utilities is the one that's more of a risk off, and that's above a rising 5-day moving average to rather neutral, and the price action is kind of just going sideways here on the 5-day moving average. You can even look at the daily price action. It's kind of just consolidating here after breaking out recently, which is more of a risk off type of play here. Okay, so those are some of the sectors. As far as some of the various stocks to watch, obviously Tesla's going to be reporting, so it's going to be important to look at what the expected move is going into earnings. Right now, it's roughly at about $23, so we'll see what that brings more towards the close of tomorrow. But right now, you can see kind of Tesla contracting here too as well after a nice run up. So is this just going to be a breakout continuation? We shall see. I think that's an opportunity there. However, earnings, right, plus or minus $23, that can obviously change things in a very quick moment, okay? BLBD is Blue Bird Corp. This one's on the radar, just getting tight around this side here, and it's kind of just poking its head at around this downsloping trend. So potential maybe breakout watch here on something like that. Monday, MNDY saw a nice move today as well. It's at 235.64. And this one's also consolidating, reclaiming that 20-day, but overall a pretty strong trend. So if you play this type of move, maybe if it comes in a little bit more and you play the breakout, I would have a stop right here at that prior swing low. AVGO is one that I shared with the Discord group, and this is really just kind of going sideways right now. I thought maybe we can tighten up a little bit and see if we can have another breakout, but offered this up early just because it came into an inclining 50-day moving average, and maybe we saw a bounce up into these areas for more of a speculative entry. ARKK, right? We talked about this when it was breaking out and recently pulled back, and we're seeing a little bit of a reflexive bounce today. It's still holding these averages, so the breakout still holds in the short term right now. And if it is, trying to move into a stage 2 markup on the weekly time frame, I mean, this could be the early move where we can keep continuing to move and the moving averages continue to kind of follow along that path. Microsoft saw a little bit of a bounce from its 50-day. That was on the tight list. ROIV was one of the trade ideas I shared with the Discord group. And this one really doesn't have a trend right now. And the main breakout level is at about $12, and it's just not there. But I did notice that price action was kind of pulling back in, right? We saw a strong move. It pulled back into an inclining 20-day, the flat 50-day. So I figured, an early entry, maybe this warrants an early entry on breakout to play it back up to 12, maybe higher. Or it breaks out here and then you consolidates and then you can add to the position so start small. But if it breaks down, like this would be the risk, right? You'd play, right here. That would be the risk. If it breaks down, just get out and see if it sets back up and so forth. So I like that look. Another one that I found interesting was mRNA. mRNA these last 4 or 5 trading days is very, very tight here. And you can see that we actually saw this dip. It kind of got a little bit tighter here and we broke out on a very strong move. And then we're back testing it and we're seeing a little bit of strength here. So if we can hold, 113.70 and this starts to break out again, maybe that opens the door for, another pop up to 140, 150, maybe even higher to retest this prior swing high, which would be, that'd be a very big move with little risk, right? If we come test that, that's a 37% gain to risk, 7%, which is fairly normal size risk. Now be mindful, earnings, once again, is around the corner, so that makes everything a little bit more difficult. Pinduoduo is also wedging here, and it looks pretty nice. It's holding above that rising 200-day moving average, so if it pulls in a little bit, maybe tightens up, this could be a potential play here, although various Chinese equities have not been doing all too hot. In recent trade, they're kind of getting hit. If I look at something like K-Web, same thing, right? They went on a monster run, and they kind of pulling back into these levels. Shopify did see some recent volatility, but I wanted to point out that Shopify too, right, it is still getting tight. We're pulling back down into this prior trend. This is where I originally traded it and got out. I'm not in it anymore, but you can see that it is wedging fairly tight here, and we have a little bit of a hammer candle. We definitely would be fighting a trend, but there's a possibility that if we cross above the high of this prior trading day, perhaps that opens the door for a little bit of a bounce in the near future. Just be mindful that we do obviously have earnings right in around the corner. Starbucks recently had some attention too as well. And Starbucks, we talked about this double bottom, right? And we saw some follow through here on this potential double bottom, but the RSI positive divergence, we saw a nice move up, a couple days to consolidate. And then we had, an investor step in, some firm or something like that step in and shot the price up. And today we're getting a little bit of a consolidation. So Starbucks looks to me like it could be potentially a good trade. I like how we had a big volume day here. It was an outside reversal day. We pulled in on light volume. Then we had this follow through breakout. So even if we consolidate here, pull in a little bit more, I think that opens the door to at least have a stop here and or at this low. And I like the odds there to, just based off of these big volume days and these potential reversals to head higher, maybe retest the 200-day moving average in somewhat the near future. Just be mindful that also earnings, right, around the corner. This is earnings season. This is what happens. You get, you got to walk into a lot of risk if you don't have established positions. So I don't personally trade into earnings like the day of, but if I catch a trade early on and it moves in my direction, I might mitigate some of the risk depending on what the expected move is. Like right now, the expected move for this earnings is about $6, $7. As it stands right now, it'll probably increase as we get a little bit closer. So we got to be mindful of that. Micron, right? Semiconductors got really clipped, but I think that we could be due for a potential bounce in the near future. I was watching Micron on the live stream, and I just noticed that on the 15-minute time frame, we do have a pretty substantial positive divergence here. So to see a little pop for a few dollars per share might be a short-term move that you might be able to capture in at. After hours, it got a little bit of weakness, and I think that's because NXPI reported. So, be aware of that. This semiconductor got hit on earnings pretty dramatically, right? This is down. What is this down? It's down, 9 or 10%. So this could have an effect on those various names. And we just got to be just mindful of that overall. I looked at Celsius again today, and Celsius has been seeing some continued sell side. We had a gap down, and it closed near the highs on some more volume. So perhaps maybe we could be once again due for a little bounce. We've looked at bounces here. I looked at bounces here. And now I've been watching and waiting. This may be an area where we potentially find a little bit of a move in Celsius, although these high beta names below a declining 5-day moving average, you got to have your risk very tight because, and typically smaller positions, because you can just get caught up in this mess. You got to be very tactical. So if you're not a tactical person, if you're just like set it and forget it sort of person, I definitely would start small positions in pretty much any name that's not in a positive trend, actually. That's all I got for you on today's episode. We went over quite a few names, talked about the current market conditions in the market. Hope it helps out and gives you some insight as to what it is that I'm seeing in the markets. See you later.